Here from BG Trading, and I hope you are well. Today is 25th of September 2023, and I will be analyzing some of the stocks that you have chosen for us on our free Facebook community, Buy, Grow, and Sell Strategy for Share Traders. Yes, every once in a while, we put the opportunity for our members to bring some stocks they believe are trading on what we call buying area according to BGS 20 strategy, or what we call technically discounted prices. Most of those members have been following us long enough to know exactly what are the key technical metrics that we use to know whether the stock is at buying area or not. So if you are not a member of this community, I'd like to invite you right now. Details at the description below. Once again, the community is completely free. I decided to separate this video in two different videos. The first video, which is this one, will be focused on the better quality companies. Every time you ask them to bring those stocks, to pick some of the stocks, we make very clear that we're not interested on nano caps, no, very, very small caps. So we're interested in small, mid, and large caps. So that's exactly what they bought. And I'm very pleased that those members are bringing really good quality companies as well with that. Some are speculative, but other ones are really good companies. And even the ones that are speculatives are stocks that in the current macroeconomic environment are underperforming or pretty much doing badly. But as soon as we start improving this macroeconomics for growth stock, which potentially could come in 2024, should the interest rates start coming down. We don't know. This is still speculation. That's why we call speculative stocks anyway. If that happens, then I think those stocks could be a very, very interesting opportunity. But I will be posting those stocks, analyze those stocks in the next video, okay? So let's have a look. Just remember, this is not a financial advice, it's just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, how we avoid FOMO, and much more, all using our proprietary BGS 20 strategy to chase 20 to 40% within 1 to 3 months lead time. Now, I'm going to teach you quickly again, if you haven't actually watched any video before, I'm going to quickly teach you how to look into a particular stock and right away tell whether this is a speculative stock or is a good quality company as per its fundamentals. You don't need to go and dig into financial reports to have this very, very high overview, a high level overview of the stock. So all we need to do is just go to ASX.com.au and take a look, type the code of the stock that you want to looking at. Which brings us to the first stock that we're going to analyze, that the ASX code is WDC, which is Wise Technology Global. This is a very good quality company which supplies technology for supply chain companies and logistic and supply chain companies, and has reported really, really well in FY23, but the share price has come down about 25%. And we go to ASX.com.au again, and we type the code of the stock, which is WDTC, and we take a look on this. This is the key thing that I want you guys to have a look at, which is this mid chart here, which shows the revenue and the net profit or the net loss depending on the company. And this is exactly the type of the chart that we want to look at. Charts from companies that has been showing year-on-year revenue growth, but also been showing steady growth on the net profit after tax as well. This is a wise tech, exactly what we want to be looking at. And when we come across those type of stocks, well, all we need to do is really wait for the stock to fall into what we call buying area or a technically discounted price, so then we can make our entry and and try chase obviously 20 to 40% within 1 to 3 month lead time. Another thing that I want to highlight in this particular company is that the revenue has increased from FY22 to FY23, which is very, very positive to attract more shareholders. This is a combination within growth stock and a mature company, which is bringing not just growth, but also some return on investment in terms of dividend. So let's go straight into the chart. I'm trying to concentrate more of those analyses into the chart formation, and I'm going to show you why I think this is a good quality, a good opportunity to buy. So generally, if you haven't done our online trading course, I'm going to teach you right quickly here. Not all. This is obviously not for all the stocks, but when you have a good quality company with strong fundamentals like WTC, what we want to do is we want to wait. We don't want to buy at the FOMO area. We want to buy under those lines here. So you see this pink line? This is a long-term moving average, and ideally, you don't want to buy anything at the FOMO levels, at very expensive levels. You always want to buy something at a discount. You go to a grocery store, you want to buy something on sale. And that's exactly what's happening here with this stock. It is trading for the short-term trend. It's trading at technically discounted price. But also, what I have notes here, if you look into the trend for the long-term trend here, the pink line, it's just coming across that pink line. And for the long term, it's trading at what we call technically fair price. And any good quality company trading at technically fair price for the long term could be a good opportunity. Not a fantastic opportunity, but a good opportunity to buy. And if you look in the candles here, you see some sort of accumulation, very tight accumulation around this $65 level, which suggests us that this is a strong hypothetical support level. Let's draw this up. Exactly what I say there. Strong hypothetical support level. We see the share price going, trying to hit this 62. According to this proposition, we might see the stock falling a little bit more, around sort of a $63, and potentially bouncing back should the whole market bounces back as well. September has been a terrible month for the stock market, but this is historic. Not a good month for the stock market anyway. So WiseTech seems to be a stock trading at a very, very attractive level, especially if those candles start coming under this pink line. Then we'll be saying that we are buying the stock at technically discounted price for the short term and also for the long term, which is even better. Here at BG Trading, we always avoid buying stock at the FOMO level, so which means we're not gonna buy. We wouldn't be buying stock around this sort of level when the distance between the candles are too great from the SMA, that red line right there. Okay, so WiseTech is according to this chart formation for me is a buy. Now let's see if we have a what we call 20% range to trade on this. Yes, we definitely have about 29% range, so potentially even if you chase about 22%, exit around $82, that could be a very effective trade. But remember, always have stop losses. At our online training course, we teach you how to set up stop losses and the targets. I'm not going to teach you right here because obviously this is part of the content of our trading course. But just keep in mind, this is happens to be a interesting, very interesting opportunity for me. This is a buy. Now let's jump to the second stock, which is Alkane Resources, ASX code AL. This is a gold stock that has been coming down over the last 12 months, and we're going to take a look whether this has a good, interesting trading gap, because indeed Alkane is trading at technically discounted price and in buying area. So the key thing for this stock is gold prices to move upwards, but it's currently trading what we call hypothetical support level. And buying at the hypothetical support level is good, but you have to make sure you got a stop loss, because you, according to our strategy, once again, the protection is always this red line here. Once the candles, the share price goes under that red line, you have no more protection, which means you trading at at what we call bearish side of the SMA, which could lead to further losses. But ideally, if you're going to trade these, as I can see here, there's definitely about 20 to 30% gap right here. What we need to see is what's happening with the gold prices right there. And if you go to take a look at gold prices, you see that gold prices in kind of in a trading sideways in accumulation phase, and very hard to look at what's going to happen with gold, like any commodities, but gold specifically. But generally, with a very strong US dollar, which is what's happening at the moment, gold tends to underperform. Although US dollars is very strong at the moment, you can see gold didn't crash. Gold still trading into sideways, which suggests if interest rates, like inflation, comes under control, interest rates start coming down next year, then we probably see a further rally in gold. Or another thing is that gold is positive is for any geopolitical conflict or any disruptive event in geopolitical scenario on an economy. We might see a rally on a gold. So gold is always a good opportunity to have on a portfolio, especially if obviously you're trading a good quality gold company like Alkane. Looking into, again, showing from the fundamental aspect of the stock, the company, why I'm saying that Alkane Resources is a good quality company is because there has been increasing revenue year on year, which means production, and also it is a profitable company, okay? Although FY23 has generated less profit than FY22, from $70 million net profit after tax to $42 million net profit after tax, which is giving or taking about 60% of the profit from the years before. We have that priced in on the stock price, as you can see here. So if you look at what's happening, so we have the peak at $1.30. The stock has fallen about 53%, which means the price has already, investors has already priced in this downgrade on a net profit after tax. And then that's because gold has been declining a little bit in price. The outlook of FY24, it's always important with those companies, but again, it all depends on how much will gold be worth in an ounce within the next 12 months. But definitely, you don't want to buy at the peak, you want to buy at the bottom of the channel, and that's exactly what's happening here. So for me, it is also a buy opportunity. Now let's move to the next stock, which is SAYONA Limited, CTT. This is the stock that we have been trading this year. We traded 3 times. Early this year, we managed to twice lock in 35% per each trade. The company has reported really well in FY23. And then we even attempt after the report, we bought the stock at technically discounted price. However, what happened was, and that was unexpected, and that's one of the reasons we decided to pull it off. We didn't actually have to take stop loss. We just decided to sell the stock at the minimum profit because the management, the CEO starts selling right at the day of the announcement. CEO starts selling shares. And then we have directors selling the shares few times after that as well. And that's never a good sign. I even have an article on our website, BG Trading, and I'm going to actually share with you. Or if I forget sharing, just ask us. The article that shows some of the key fundamental metrics that you needed to appraisal in order to look into buying or selling a particular stock. And one of the key fundamental metrics is to look at whether directors are selling or buying shares. In this case, directors are selling shares. Because the fundamental metrics of this particular company is so strong, as you can see here, we saw a huge revenue increment in FY23. Also, we saw the company become a net profitable company from net loss. This is a company, they call it retail stock, but it's actually, for me, it's more like a technology company because they don't hold any inventory. This is the massive competitive advantage from CETTIRE Limited compared to other retail stocks out there that owns heaps of inventory. This company just manages brands and very high-end brands, so it's a good quality company to have. However, because directors are selling, I would be trying to look into buying again once the stock goes under the SMA 250. That's the only reason I decide to pull it off from this particular stock, is because for some reasons, probably profit taking, directors and CEO selling the stock, never a good thing. So not buying for me. I would be buying around $2 or under, which means the share price will be trading under the SMA, a technically discounted price. That's all we want to get into CETTIRE Limited upon this particular result. Okay, so now let's move to the last stock of this video, which is Syrah Resources. Syrah Resources, the ASX code is SYR. Now, this is a EV related stock. As you can see, we took stop loss around June, July at 78 cents. And the reason I took stop loss is because the stock has broken out its hypothetical support level. There was a strong hypothetical support around 90 cents, broken out, technical analysis, so we cut it. We cut that loss, and then now it's trading at 46%, which is exactly, and I keep telling people, this is why you take stop losses, okay? Because you need to make sure you don't get exposure to another 42%. Imagine, if I'm taking stop loss right at 78 cents, would be essentially taking another 42% loss rather than 12% only. So we took 12% loss on that particular trade, and the reason, that was a fundamental reason, a macroeconomic reason why Syrah Resources have fallen. By the way, this is what it looks like on a profit loss chart. This is pretty good. You see how the company has started decreasing its net losses year on year. That's exactly what we want. And then also you can see how the company has increases its revenue year on year. Also, that's what we want. The problem here is in FY23, which the company hasn't actually reported the full year, just half a year. For some reason, they reported on a full calendar year rather than a financial year. So we'll see the full FY23 in January, February, sort of speaking. But for this particular company, the key it's actually the only natural graphite producer on ASX. So you're looking to buy a stock that has exposure to graphite, a producer, not explorer. All the other ones are still explorer and developer. These guys are producer. And the problem is, Chinese company flooded the market with synthetic graphite in around this year, in the middle of this year, and that was a result of a lot of incentive from the Chinese government in China for EV material related companies. So they pumped the market with lithium, they pumped the market with spherical graphite, and what happened, inventory is really high. Companies stopped buying EV materials. That's why lithium stocks is all falling as well. But this particular one, even though it's a producer, the share price took the hit because the outlook for the next 12 months from the half-year report wasn't that great. And then obviously investors pull the money out and start looking into different opportunities. It is a technically discounted price. The share price is still falling pretty much. I haven't seen any actually signs of reversal, but given the fact that we took stop loss right at the top there, we could start looking at a potential reversal on EV related material demand, and that will be critical to go back into those stocks, and not just graphite stock, but lithium stocks as well. You see, most of those penny stocks, non-producer stocks, they are falling. That's, again, macroeconomics are not favorable for these material stocks at the moment. So we need to track what's happening with the commodity. I'm not going to be looking to buy this particular stock right now, okay? But we'll be looking very, very closely what's happening in China with inventories, and if that eventually shows that inventory in China start reducing and companies will be looking to buy more, and then that's when we're going to be buying this particular stock. So not a buy for me at the moment. Just watch, not the stock, watching the commodity, what's happening in China, and then as soon as you see demand increasing, that's what we buy. Okay, so we have resources that we have really good connections in China. If you looking to have access to that information, just take a look at becoming VIP member of BG Trading, and that's what we provide to our clients as well. Great feedback, and you can also chat with us and the analysts if you have any questions about anything related to the stocks that we are trading and stocks that we are analyzing during the meantime. Guys, this brings the video to the end. Okay, I'm still gonna analyze the more risky stocks, which are, let's take a look here. Neo Metals, Points, Bet, Novonix, Talga, Renasco Resources. So those stocks will be analyzed in the next video. And that wraps up this particular video. If you have any questions, please put in the comments below. And I hope to see you next video. Bye-bye.